Good morning and welcome to the Monday Call, brought to you by NZ Funds. This morning we are joined by distinguished Professor Jason Potts, one of the world's leading thinkers on institutional economics and innovation. Based at RMIT University in Melbourne, Jason leads the Blockchain Innovation Hub, is a fellow of the Academy of Social Sciences in Australia, and co-edits the Journal of Institutional Economics. His work spans blockchain, creative fields, and economic change. And today we're going to explore a whole lot of stuff around how that works, how it interfaces with society, what the direction of it is, and all the change and the pace of change and how that's playing out. But before we kick off into the meat and potatoes of our conversation, Jason, a little bit about you. Let's kick off with, you've got an amazing resume, but how did you find yourself in this area of economics?
Yeah, thank you, Stephen. That was a magnificent introduction. Yeah, look, so I'm an economist. Work in universities, and my whole thing is studying long run economic growth. Just how do economies grow? Why? How do countries get rich? And the basic answer is just new ideas, new technology. There's lots of other factors that matter, but the overwhelming thing is just new ideas into the economy, put them to use. So I've been just started getting obsessed with a few new technologies about 15 years ago around what was sort of blockchain then, but also just sort of other things like drones and very early AI at that stage even, and just started to realize that these things were um, a little bit different to the standard way that technology normally works in an industrial economy. That they were having a different effect. So, myself and research teams started getting obsessed with this, and that's sort of how we ended up where we are now. Digital economies.
Digital economies. Okay.
Yes.
You have said, to quote, that blockchain is the new infrastructure of the economy. What
Yeah.
do you mean by that?
Yes. So I mean something very specific, and when we think of what is infrastructure, we normally go roads and bridges and ports and physical infrastructure for moving goods and services around. Like, and that's what you invest in, and the more you have of those, the better other parts of the economy can work. But there's another part of infrastructure that we often overlook, and that's record keeping. And that record keeping is things like who owns my house right now, or when we, keeping records of contracts, or just a whole field called accounting, which is just a bunch of professionals just keeping track of all of the data in an economy. And that sort of layer of what is basically law and accounting, and the things that sit underneath all of the financial services and stock exchanges and just all of that. Absolutely crucial. Just nothing happens without that. The better that works, the better everything else works because you can trust it, you can trade, you can contract, you can. And for the last basically 800 years, all of that infrastructure hasn't really changed in technology at all. It's been bits of paper, trusted professionals, and a book that just keeps track of everything. And that, the entire economy is built upon that. And you have good ones or bad, you have reliable administrative infrastructure or unreliable ones. Those unreliable ones generally don't grow economies in the first place. You just have chaos and corruption. Um, and what the insight we had, and again, not just us, others spotted this at the same time, was that for the first time in a very, very long time, we've had some innovation in the types of record keeping around just keeping track of of facts about assets, about ownership, about all of the sort of contracting and objects in an economy. Money included that. Um, and that's what blockchains are, was that, they're a new type of computer, but the use case of that new type of computer is to enable just records of economic objects to be fully digitized and all the way down, so you can interact with code. And that's it, right? That's an innovation in we're calling these things institutional technologies as opposed to industrial technologies. So industrial technologies, tractors and machines and whatever. Institutional technologies, ledgers, record keeping. Um, and um, Anytime anything happens in the economy, two things happen. You've got some good or service moves around, but also the underlying data about it shifts. And the big revolution that's happened with blockchain is that we've got a new way of doing that data layer. First use case was money. That was what Bitcoin is and stable coins and so on. But the big breakthrough is doing it for everything else. And I think that's more or less where we are now.
Why is it so important?
It is the good question that is not often asked enough. It's so important because of just the most basic economic reason of all is just costs. Um, that layer of administrative record keeping and trust in an economy, saying, how much could that possibly be? It's about a third. A third of all GDP is just keeping track of facts and trust in those facts. And you just add up the entire population of lawyers and accountants and record keeping and just management and just everyone whose job is basically just to answer the question, is this true? Then something changes. Now what? Now what is the state of truth? So that we can all believe and trust that. Yeah, about a third. We did some work on this, measuring this. Others have done similar things, but the point is, most parts of an economy, technological change drives down costs, and the entire reason that we are rich and hundreds of years ago we were less rich is just because of technological change driving down costs in production of machines and factories and transport and logistics and so on. We've had no corresponding driving down of costs in data, record keeping, administration. Um, if anything, it's gone the other way. So for the first time, we've got a new possibility of significant cost reductions in just verification and monitoring and record keeping and just answering the question, who owns this, who owns it now, what are the facts associated with it? And the cheaper that gets, and demand curve sloped downwards, if you remember Econ 101, when something gets cheaper, we use more of it. If we can have administrative complexity much cheaper, we'll have more complex economies. More complex economies is how you create value and wealth. So it it's just a single big answer, but it's profound.
So much of the public understanding of blockchain, I believe, is intertwined with Bitcoin. The two
Yeah,
came together, and now they've sort of bifurcated, if you will. And we'll talk about Bitcoin in a little bit, but it's become an institutional asset which is available, now on lots of different platforms, and uptake is really meaningful on the one hand, and then you've got blockchain moving to the side and being embraced by banks in part. I don't know, we'll talk about that too in a second, but and governments and so forth. And so it's probably important that for listeners to separate the two as concepts.
yeah, no, sure.
That
It's an important thing. So Bitcoin, when that first emerged, when it was, it was an innovation, 2009, so few years ago now. That was two things. That was Bitcoin, the token, and it was Bitcoin, capital B, the blockchain, the Bitcoin blockchain. A blockchain is a new type of computer. It's a new type of distributed computer that just enables a protocol to run on multiple machines around the world without any one central node. And why is that significant? Because previously all computers had central processing units. This one doesn't have a central processing unit. That's what a blockchain is. So Web3, new type of computer, new type of computing. What does it enable you to do? It enables trustless computing, which means that there's no single central node doing processing. What can you do with that? One application is you can run a token like Bitcoin. So Bitcoin, the token, the digital gold thing, that's an application of blockchains. It was the first one, which is why it's sort of those two things merge in everyone's mind. Um, and interesting, it creates digital scarcity. You can create a money with that or a store of value. Interesting use case. But the underlying technology, blockchains, are a way of doing distributed trustless computing. And you can run a token on it, but you can also run anything that is made of digital information, i.e., code, which means you can put programs and software into it. And when you do that, that's what smart contracts are. That's what the Ethereum blockchain, for instance, is. That's what a whole lot of all of the subsequent generations of blockchains were just simply going, what else can we run on this this distributed, trustless computer? And it's that ability That's the technological revolution, I think, is the ability to run trustless code on these new types of global computers that's critically um, don't have. I mean, they don't have central control units in them, and that's both the thing that terrifies people. Well, how do we, who's in charge then? Answer: no one. Um, but that's also the incredible revolution. If no one is in charge of it, then no one can control it for their own purposes. It just runs as a global public utility.
Which is a beautiful segue to my next question. How do you how do decentralized technologies like blockchain reshape the role of institutions like banks
Yeah,
and governments? And are there vested interests that want to slow down its progress?
very much so. So, I mean, economies are fundamentally made of institutions. Institutions are just the rules that we use to coordinate everyone's actions. So, a market is just a protocol for how we interact together and in order to do trade. Um, all economy is just a vast network of human cooperation and coordination. Institutions are the rules, the instructions that we have for doing that. Some of those are encoded in culture, some are encoded in law, some are encoded in operating procedures and organization. So there's this stack of rules that enables large scale human coordination. That's an economy. So an economy is made of institutions. Those institutions can be built out of different things. So traditionally, and again for the last 1,000 or so years, we've built those things out of language, and that's when you write that down. When it's written down, that becomes law. When it becomes interpreted, it becomes the process of law and so on. So most of the all of the economy for all of our previous history has been designed to be used entirely by humans. Um, and what blockchains enable us to do for the first time, I mean, AI massively accelerates this, by the way, but blockchains were the first bit that got us there, was to enable institutions to be far more embedded in machines. And why is that good? Well, machines are just cheap. They're just so much cheaper and faster. It's the same logic as tractors and horses and so on. It's just better, faster, cheaper way of doing a thing that we're going to do anyway. And so that idea of just thinking of what is blockchains, when blockchains enable record keeping to be digital. Once it's digital, we can bring in every other technology, every other sort of compute technology. So AI comes in, oracles come in, just code comes in, software comes in, everything stacks upon that. But what this is a new type of industrialization, but not industrialization of economic production, factories. It's industrialization of economic record keeping, institutions. And that's the revolution we're going through right now. Why is this interesting and disruptive? Because the previous way we did it was with intermediation. So we used large companies. That company would basically run the institutional infrastructure. What is a bank? A bank is just a large book that just keeps track of everyone's accounts. And every time a transaction occurs into an economy, they do a double entry bookkeeping maneuver inside of it. Now that's digitized. We've sped it up, but it's not decentralized. It's just one single book. So you have to trust the bank. Um, that's useful because we've got a point of target for regulation, so we can write banking laws and we can know which banks where we can visit them and knock on the door and say, "How are you doing with this sort of thing?" So we've built our economic infrastructure out of the technologies of companies. We've made them very large to make them efficient. Um, but the problem of making very large things like that and having very few of them is you don't get much innovation. There's relatively little competition in that space. So again, we see lots of innovation in aerospace and agriculture and so on, not so much in banking and other institutions. That's there's a reason for that, is that we've sort of chosen monopoly, or we've chosen the very way we run our institutions like that makes innovation difficult. So this is sort of where we are now, with this transition of new technologies come in, enable us to build a new type of base layer of the economy, entirely digital. That's disruptive because we've already got institutions in there, but those things are made of something else. They're analog, as it were, large sort of corporations. So um, it's the banks initially resisted a lot of this, and were very successful at that because one of the purposes of regulation is to stop technological change, and that's to enable safety and security and control. But it also means we don't get the benefits of technological change, which is lower costs and more innovative products and so on. So, you know, crypto, Bitcoin, AI, all this full digital stack is right now running into these institutions that we've had for hundreds of years, essentially built around a single book, a large corporate hierarchical organization around that, and then significant regulatory control over those industries in terms of entry and what you do and how you do it and so on. So banking is the big obvious one, but it's not just that. Banking includes money and payment systems and central banking, and it includes all of the contractual apparatus around that, which goes out into commercial law and contracting and accounting and other types of things. So that full stack of how we do economic administrative infrastructure is poised for a revolution. And the revolution is not inevitable. It's disruptive. It's happening in some parts. It's being widely resisted. Out of for multiple reasons. You know, no one wants their industry or their particular source of profit to be eroded away by technology. Of course, you fight against that. Um, but I think this is the decade we're in now. Is sort of is how will this play out? My basic bet is that the rise of new types of protocols and new organizations will outcompete a number of the will outcompete some of the large banks. And but again, who knows? This is a we've we're going through an industrial technological revolution, but it is one that is happening at a level we haven't seen before. It's happening very, very deep in the infrastructure of economies. Interestingly, it's also happening everywhere. So it's happening in New Zealand, it's happening in Australia, it's happening in America. Um, Different regulatory regimes are interpreting it slightly differently. In the US, they just, for the 4 years previously under President Biden, they went one direction. Under President Trump, it's shifted hard in the other direction. Um, so, in terms of blockchain, but the same thing will play out in terms of AI. AI disrupts industries in exactly the same sort of way. So, this regulatory politics, I think, is the most interesting part of the sort of industrial changes that we're seeing right now.
Well, you're trading off in the end, as you said, quite, you're trading off the benefits of technology, the profitability that can drive with safety, perceived safety and security, at least.
Mhm.
And so it's no surprise that, take money, for example, that you're wanting to have a lot of security in the change process, even if you're confident that at the end it's safe and secure, that the process to arriving at the end um, is a safe and secure process. So um, one of the things that I can see, governments wrestling with is how to within their own economies, the Reserve Bank's involved in exploring these ideas, and as others are, and then that's in sort of locally in Australasia. But in the US, you've got it seems that well, firstly, most of the major banks now are involved in Bitcoin. Many are trying to adopt blockchain technologies for settlement purposes or for contracting purposes. So different parts of the world seem to embrace the technology at a different pace, according to, I guess, their willingness to take risk. How do you
Yeah.
see that playing out? And they wrestle with it because you have these false starts too, where I think the ASX had some difficulty with its settlement infrastructure. I'm not too close to that, so that's all I'll say on that. But I'm aware that they did, right,
Yeah.
and I'm sure it's not unique to them that they launched down a path trying to build something and then it hasn't
Yeah.
played out in the way that they expected it to.
Yeah, no, like, that's happened, and this has been going on for a while. Like, I think the first sort of banks that were starting to look into this to see how they could adapt to this new technology. This was back from 2016, 2017, with the first movers on this. Most of those experiments failed, and these are serious plays by serious banks putting serious money into doing this. Almost all of them failed. Mostly because what they tried to do was to sort of overlay this new technology into their existing infrastructure, just to try and sort of treat it like a SaaS product or something, and just how can we back end this and get some efficiencies. And that made internal resistance because it was kind of solving a problem they didn't really need solved. And so and that was for retail banking, for at all different levels of sort of applications of this. Um, the problem is that you need new business models. That it actually needed to fundamentally re-engineer the entire way in which banking was done, and it's generally difficult to have incumbent old companies that have done something one way for a long time. It's very, very difficult for them to pivot and do new things. It's not an accident electric cars were mostly failed by the existing manufacturers, whereas it was Tesla and new companies build new technologies. And I think the same sort of thing we're likely to see in a lot of financial services and know, legal applications of these things is it'll probably take new companies to do it because new companies can just build entirely new business models. They don't have to deal with legacy debt around the way we used to do things. So just they're able to move much faster. The problem is a lot of the regulatory environments have sort of evolved around the existing business models and the existing types of services and so on around that. So, you know, companies, industries, business models, professions, and regulatory environments all co-evolve together. They kind of lock each other in place. And this is the problem with new technologies, is that new technologies often work very effectively in practice, but horribly in terms of the legislative and regulatory environment in which they live in. And it's not so much does the technology work, will it make life better? Usually the answer is clearly yes. The problem is it's illegal on some weird dimensions, or it's hard to implement in law because suddenly it exposes a huge amount of uncertainty or risk that is unclear how to handle that. And it's those types of the regulatory environment, the managerial environment, this sort of soft side of all of these things, which doesn't mean it's not difficult. It just means that it's technology is not usually the problem. It's usually a lot of management adaptation and regulatory environment that needs to evolve and change. Um, why does it that change? Well, there's just a lot of vested interests. Politics moves slowly, and that's good. It's good that politics moves slowly, but in these contexts, this is a big challenge. No country wants to go first in case it blows up. No one wants to be the guinea pig, because the guinea pig is going to be discovering all of the risks. Um, the second movers will really get advantage here. And again, we see this a lot with new technologies. It's relatively rare that the innovator is the company that subsequently goes on to create the breakthrough product. It's usually the second movers who can observe all the mistakes that were made. They come in, they fix it up, boom, off we go. Um, so on a global scale, that's where we are now. Is that a lot of countries are just waiting for everyone else to move first.
You can kind of draw a parallel with the internet generally, though, right?
Yep.
Because we, in you know, um, the noughties and the 2000s, there was obviously so many businesses were created and then struggled and then failed.
Yeah.
And and you could, if you observed it at the point in time, say the whole thing was, the internet writ was a dumb idea. Or, why did we as species throw so much money at this concept only to, you know,
And this is, where we are right now is we're still in the noughties in terms of internet for this next generation of distributed digital compute. And I think these things are hard, and they're hard not just for technical reasons. That's the hard bit that you can see. The real challenge is just all of the business models. It's the new management practices. It's the new professional boundaries. It's the how do we actually implement this in detail in practice in the marketplace. And that was the thing that if you go back and look through all of the what were the mistakes that were made in the first sort of internet bubble. um you know it wasn't sort of big fundamental choice of technology things. They is the it was most of the those technical things they got right. It was just all of the silly stuff around pricing and where how what's the scale of here and how fast do you move with this and what types of new jobs and applications and products and a lot of that stuff. The only way you discover it is just experiment. You just have to try a bunch of stuff. There's theory is not really very good for those things. Eventually, you figure it out. Mostly, you figure it out by watching everyone else, make fools of themselves and burn money. But eventually, we got there, and just let us not forget that right now, the top 20 companies in the world, 19 of those were more or less created in that period. Vast wealth was created. It just didn't look like it at the time. And most of the first movers, not all, Amazon is the big exception to this. Most of those first movers, uh, they're long dead.
I'm not using
Yeah,
Netscape anymore.
yeah. Or I mean, even in Netscape, that was yeah.
That was probably the 8th
Yeah,
version,
that
though.
was it wasn't the first. It was the first that broke through, but
Yeah.
but even that one got killed. So, again, investing is hard. Picking winners on this is hard. But the big advantage of going early is that you learn a lot. And if you can keep that momentum up, you can sort of you can enter markets that you previously had no business being in. New Zealand and small rocket launchers is a great example of this. Like there are advantages to going hard and early, but those advantages are all around learning and learning faster than someone else in order to break into their markets. And this was the argument I've been making for why Australia and New Zealand is that we've got a chance. The thing about digital infrastructure is it scales. A small place can build infrastructure for the world. This is not like building roads and bridges and dams where physical scale means only big countries can build big things. This is just code. A few smart people in a room can build infrastructure for the world. And that opportunity is still there, particularly around digital trade infrastructure and other types of logistics type of things. I think there are a lot of big um, institutional markets for infrastructure, for trade and institutions that are still wide open right now. I think circa July 2025, we're seeing it for stable coins. That fight is emerging around new companies coming out and building new types of stable coins for the world. So and again, we are still very very early in this institutional revolution.
What kind of business models? You've mentioned trade and finance. Are there other sectors or subsectors that you see the use case being added or you
No, look,
picked out early?
the crucial thing is this is where are institutions in the economy everywhere. Everything involves that. So this this technological stack, and again, it's not just blockchain. It's blockchain is the layer that writes the records, but you've got to get information in. Those are oracles, satellites, Internet of Things. You've got to process that. That's AI and other sorts of things. So there's a full stack of a stack of technologies that goes into this distributed digital compute for record for institutions. It's not just one technology; it's a bunch of them that all come together on that. But they go everywhere. Now they'll start wherever profits are highest. So there's a logic why it started in finance, as the finance industry is the one that is most disruptable because it is the most immediate. But every other sector eventually comes. My sense is it'll go finance will be early. Um, Midway along the path will be logistics and transport and trade. Right down the end will be health and public services and the sort of ones. But that those ones are hard because they are just so massive, but also they are so tightly wrapped up in regulatory protections, and again for good reason. But that's the thing that's being disrupted, and so they'll come last. But this is an economy-wide revolution. And again, in the same way that where does electricity go? There's not the electricity sector; it goes everywhere. But that's electrification took 50, 80 years to sort of to have its complete revolution through the economy. This will probably happen faster, but it may not be that much faster.
I have to say, when I was turning the heater on this morning, I was deeply grateful for electricity generally, and the revolution that whatever revolution it took to provide that to my household. Um, there was a different type of revolution last year, which was, and you've sort of touched on one portion of it, but crypto ETFs were
Yeah.
approved by the SEC, and then there's been a flurry of listings around the world, not just in the states. And then you mentioned stable coins, which I don't know if you want to try and explain how they interface as well. That would be a really, I think, helpful for our audience. But those two asset types, they are investable assets for
Yeah.
um, uh, institutions, mums and dads, retirees, whatever it happens to be. And particularly in the US, there's quite a large um, user base of them, or an investing
Yeah.
audience. Why now? And, what do you make of
Yeah.
it? What do you
No, it's
what
an
is it gonna
interesting
change
one.
things?
No, I mean, I didn't pick this one early on. I was sort of, why would we need ETFs? You can just custody digital assets yourself. Or why do we need stable coins? We can just use cryptocurrencies directly. And the answer is different in both cases, but I think it was most people in crypto got this wrong. And because it just seemed like, why would you need that? And it's the same answer to the question, why would you need Dropbox, the company? You can just use, C++ and write some code directly into your thing. And the answer was mostly no one wanted to do that, and they wanted the convenience and security of just not having to worry about these technical complex interfaces. Um, but with ETFs, the answer was this point I was making before, is that most funds aren't allowed to hold crypto directly for reasons. Some of those are good reasons, some of those are ridiculous reasons, but they're not legislatively or regulatory able to do that. So they need an intermediated vehicle. So ETFs are just the vehicle, and vehicle for to enable funds to purchase to purchase digital assets at scale. Um, I would just assumed that we would get past that because the regulations would change eventually, but no, we're not there. And that we may never be there, and that might be fine. This might be just a new asset class that is wrapped up in that. But just to be clear, the answer is just they're just the vehicle. They're nothing more than that. But here we are. Um, the stablecoins are a bit different. They so what a stablecoin is just a synthetic digital object that represents, so it's a stablecoin of, say, the US dollar is just a digital token that represents a US dollar, and there'll be a US dollar somewhere that's in a bank account that's pointing to it, or there's some sort of underlying collateral. But what stablecoins enable us to do is to have a payments network without banks. And why is that significant? Is that because what you've just done is you've invented email for money. It just goes pure protocol, which means that I can write code, I can bring AI agents into this and have them have their own money. So the significance of stablecoins, I think, is initially it's just a new type of internet direct digital money. But I think the question to ask is who will use it. And the answer is it's not obvious that humans will use it. Once agents, once robot taxis, once all of the machines in the economy, the machines can't have bank accounts because they don't have addresses and you can't take them to court. But they absolutely can hold stable coins. They can have digital wallets. And that new type of and so this is how AI gets into the economy. Is it'll at some point AI will become agentic. As it becomes agentic, it starts to become like an economic agent. Right there in the name, as it becomes like an economic agent, it needs to make contracts, make payments. How will it do that? It cannot use the banking system at all. Uh, it needs its own one. So that sort of new economic infrastructure for the machines, I think is that's the sort of insight here as to what's the significance of stablecoins. Now, we're not there yet. At the moment, stablecoins are mostly being used by humans, just trying to simplify payments using their phones, usually internationally, so between banking systems that would otherwise hit the SWIFT networks or these other networks that slow things down. So that kind of just algorithmic, software-driven payments network. And payments is the beginning of contracting. Once you've got payments, that's one side of consideration. Then you can have conditionals upon that. That's smart contracts, and off we go. But this explosion of machines in the economy, not just machines in industry, is I think that's the sort of insight as to what is the value proposition here? Why is this significant? And back to our previous point, who's building the infrastructure for this? Well, it's unclear. It's like that's the big opportunity here is to build the economic infrastructure for these sort of global digital payments rails. But those payments rails don't run on a fiat money; they'll run on a digital money, and that digital money, the significance of it is that it just bypasses the banking system. It sits on top of, it'll write down to it, but it's not slowed by it. It's not constrained by it in that fundamental way. So that's the new thing. That's the new types of rails that are being built right now.
There's so much in that. For starters, I think when a lot of people hear the idea of AI and entering transactions on itself using a synthetic token which represents a dollar somewhere,
Yep.
their their brains will explode and they'll go, "Wow, that is this." I mean, that on itself is a lot. Um, but it's a at the same time, it's a really, really exciting and interesting piece. And the people who are trying to drive that forward, or the institutions that are trying to drive that forward, um, clearly they see the future that, and they don't want to be restrained by. I guess take Swift for example. You want to send some money to the UK at 2, 3, 4 days. Now with already with technology, you can do it instantaneously, and so it immediately makes it hugely convenient for people, um, and it requires a different system to underpin it.
Yeah.
So the
And
convenience benefits, if you can build a different form of guardrail, as you call them, um, are real.
yeah.
They're very real.
Yeah. And just to, I mean, we do this all the time with communication. We send emails around the world, and I don't even ask the question, which country am I sending this email to? It doesn't matter. It absolutely does not matter. We've got the tech infrastructure. That's the internet. We're building layers on top of this. But the question around why does banking look the way it does? And the basic answer is regulations shaping business models. But those regulations are there for a reason. They're there to create safety and security and trust in the system. If we don't trust banks, then people don't use them. If we don't use that, we don't get the ability to. The economy doesn't really exist in its modern form. So where does the trust come from? And one answer is okay. We need new regulations. We need better digital economy regulations. Most countries in the world are trying to build those right now. But there's another answer, and the answer is just cyber. We hit this with math, um, and a lot of the ways that software systems themselves make themselves safe is not through law; it's through code. And any SaaS products such as layers and layers of firewalls and cryptography and protections and so on, public key crypto. There's a whole lot of just smart technologies we've figured out to create safety in compute systems. We don't use those. We permission those in regulatory environments, but we don't use them fundamentally as the tools. The thing about decentralized distributed computing, about blockchains, is that you can. You can build safety and security in a different way, but it looks different. It's much more on the user side. You embed it into hardware devices. So there's just a different sort of way of thinking about um, how you build safety and security and trust into these types of payment systems and so on. So, and I think that's why this is hard. That there's a regulatory pathway forward that we're taking mostly because that's what worked for a previous generation of financial and institutional technologies. But going forward, we can actually rely more on math and code and and just machine security directly. And you talk to your mm, software engineers, they'll absolutely assure you that yes, we can do this. This is not a magical future technology. We can absolutely do it now. It's just that most of our regulatory models and therefore business models and therefore industrial and structures are just not designed to treat safety and security in that way. We use oversight and legal threats and we have a different way of doing that. So again, it's we don't have a technological challenge right now. We have a sort of a social adaptation of how to manage risk at scale, and to all collectively reach agreement about how we're going to do that. So that's where we are right now. And again, I'm not smart enough to figure out how to solve that one or to see how we get through this. But this
What
is why it's a user listing challenge right now.
what do you think policymakers, knowing what you know, which is vastly more than everyone else, at least vastly more than me, um, uh, what do you think policymakers are missing in their thought process through this?
Look, I this is a hard problem. I have nothing but respect for people wrestling with this challenge, just because you're dealing with radical new technologies that are extremely sophisticated, and there's not just one. There's a there's hundreds of them. Every single one of them is hard and new. So we've got a tech revolution, but the point I'm making is that the tech revolution is the easy bit. The hard bit is is navigating this transition. We can't just burn it all down and start again. If we could burn everything down and start again, that would be easy. The difficulty is transitioning from a regulatory environment, a business model environment. And by business model, I just how do the companies make money? Where is their points in which they extract value and so on? That is made of multi-sided markets. So often there's often some weird pricing going on in this. Um, that that is embedded in professions, and the requirements of professions and the skill sets of about who can do what when, around consumer expectations of what a shop looks like and how I buy finance and how I use money and what capabilities I have, around trust and hardware objects, where a lot of the nature of this revolution relies on hardware devices getting a lot better and smarter and more things built into them. Um, well, at the same, well, at the same time, everyone has to keep up with, what is a fantastically boring topic, just, deep financial infrastructure for the global economy. I mean, most people rightfully should not care about that because it's not, that's the
Oh,
thing.
I beg to
Someone,
differ. I think everyone should care all the time about it.
all right, but they
Working in the industry, of course.
But
Yeah.
they don't. So you've sort of got to take if you're a regulator, if you're a politician, you've got to take everyone on the journey along this. And so it's not just a matter of saying, right, New Zealand, we're gonna have the internet in New Zealand, and at some point that was said, and you're like, well, do we need the internet? That sounds crazy. Turns out, yes, we did need that. Now we need this new technological revolution that doesn't even have a name. It's a bunch of different things that all have to come in together. It's going to be massively disruptive. You will not understand what's happening, and everyone's going to be angry at you all the time, through this. But if we do this, um, the economy will grow, and it'll because a bunch of stuff will get cheaper, opportunities will grow, we'll all be like twice as rich. And it's a completely credible promise to make, but it is just the hardest thing in the world to do. The problem is you can't point to another country and go like Singapore or like Switzerland, because they're going through the same process themselves. So that's where we are. I do not envy politicians in this, but the reality is that there is a significant role for just public education. The problem is that there's no courses that you can do or great books you can read on this. The only way people learn about this is just by doing it. So we've got there are people that have been really trying to do this. But again, that was what the internet was like in the late 90s. That there were a small number of people who were just playing with it and messing around with it and going, nope, this is the future. There is a revolution here. They couldn't point to it. It was very, very weird. There was no obvious big examples of it, and it looked nothing like what we'd seen before. This was so here we are again, in the same process.
Do you see any particular countries taking the lead? I mean, there's obviously the US and China
Yeah.
and so forth, and they threw a lot of money behind technology, but money and outcomes aren't always the
No,
same thing.
no. Look. Lots of countries are trying. My go-to list for who's doing this well is always sort of Singapore, Switzerland. some of the sort of tax havens have been very good on this, just simply because they're in a position to sort of take the lead on this. Um, it's not so much countries, it's particular clusters of people. Like in the US has sort of finally got its act together on this after really fumbling the ball multiple times. But that wasn't because the US did it. It was because a small number of senators in weird states like Wyoming got together with a few companies, and they were able to sort of maneuver and do a really hard thing of lobbying, of industry lobbying, and putting together coalitions to do this. So, every country that has done this well has done it hard. There's no easy way to do this. It really relies on insider champions, just doing high quality lobbying, high quality demonstrations. The thing that when I talk to various governments around about this, is just the single most important thing is just try, just experiment, create little safe pilots and experiments, and don't expect them to work, but just use them as opportunities to learn about the types of challenges and things that you'll see. And again, this is easier in smaller countries. Just there's fewer people to wrangle. Well, so I mean, I'm extremely bullish that this is an opportunity for New Zealand, just simply because New Zealand is, smart, well-educated country with that has a huge opportunity to actually to develop this technology or integrate this technology, but it's also small enough that you can get people in a room and just try it, or just agree to let's see what happens when we do this.
Yeah. I mean, we do have a history of developing some cool technology, and it would be nice if we could be at the frontier of this as well.
Yeah.
Um, Look, how how do you see innovation in this space impacting how investors operate over the next 10 years, say? Because one of the things I observe is that we've had this massive institutionalization particularly accelerating over the last 2 or 3 years, of digital currencies and digital products, such that it is now part of the financial ecosystem in earnest. Do you see that continuing, or have we reached the peak of this sort of integration, and with it, there's all this trust that comes to society, right? Because everyone's now, buying Bitcoin is not this crazy fruity thing. It is actually a legitimate asset class
Yeah.
that people use to diversify portfolios. Similarly, that builds trust in the blockchain. It builds trust in the path of um, decentralized ledgers
Yeah.
and
No, look,
everything you've been talking about.
I think there's two parts to the story. The first part is the individual technologies getting in. So this is blockchains getting into the economy, or particular tokenizations, and that's a hard road. People become familiar with this, and I think we're 16 years into this technology from its first invention. So we're partway along that. But that's not where value is created. That's not where wealth comes from. That's just getting the technology into, you build a port. The port doesn't create wealth. It's fish flowing through the port that creates wealth. And it's the same sort of thing here, that the tech stack has to be assembled and built and integrated and put into place. I think we're we're getting along that path fairly well. It's by definition it's hard. By definition, fortunes will be made and lost, but not. But the great sort of wealth effects haven't happened yet, because what that only happens when we start putting it together. When we can start to sort of use this tool and this tool and this tool and put them together and create a new class of product, or a new class of service. And that's that's the bit that, if you're an investor, that's your long-term play, is trying to understand what new types of industries, what new types of platforms that are going to be built, to assemble all those things together. So, this isn't a tech play per se. It's not. I'm not investing in a technology, and I'm just, what you're really trying to do is you're trying to bet on new types of business models, new types of economies emerging from this tech stack that is being implemented. Um, so the venture capital, most of this is you've got a big sort of venture capital part of this, high risk investments and so on. That's typical in tech. But the other interesting thing that crypto did, and I think we're going to see this come back, was the amazing thing about crypto was that it was self financing. You could issue a token that would, and that was revolutionary. It was outside of the you know um, financial regulation. Didn't quite know what it was until it eventually cracked down upon us and more or less shut that down. Um, but that insight was powerful. Here you've got a self-financing technology turned out to be wildly unstable, crazy, full of bubbles, um, but it worked in the sense of it did actually pull finance.
People bought the asset.
People bought the asset, though, and we complete debate about whether that was a good idea or not.
Or whether it was an asset at all.
But it was an asset. But no, it was a very early stage application of finance can actually work. These new business models can be self-financing in a very interesting and weird way. Um, that technology, I mean, that the technology is still there. You can absolutely do ICOs still. You just probably go to prison more often than you used to if you try that. But it's gradually working its way back in again. And I think again the thing why are ETFs significant is that they might well be a backdoor for that to happen. If I can do this and then bundle those things into an ETF, is it still the same thing? I don't know. But the point there is that you've got sort of two layers of this how wealth is created here. One is the technology gets in. Second, the technology gets pieced together to create new types of economies. And the way I sort of describe, what is this thing? These aren't new industries. They're not new products. They're not new firms. They're new economies. And for the last, the industrial era, economies were wrapped inside countries. So there's 192 economies in the world. And each economy had its own money, its own laws, its own finance, the full institutional stack. Um, what this technology does, what crypto plus all of the other things enable us to do, is to spin up a digital economy from scratch. And it'll have its own money, its own asset registries, its own payments layers. And it'll exist, it doesn't exist geographically, it just exists wherever it goes on the internet. That's like, back in the 15th century when we invented companies. First there was no companies, then there was one, the sort of Dutch East India Company or whatever. And a company was basically a infrastructure for organizing people and money to do a thing. And they'd throw these things up and they would exist in the world to do a thing. And then there was one, then there was two, then there was five, then there was 100. And we have no idea how many companies exist now. There are a billion, who knows? We've stopped count. Or we could count them in principle, but it's way more than 192. And I think what digital economic infrastructure institutions are is just a way of building very cheaply, very fast, an entire economy in terms of the institutional layering of it by just deploying a bunch of code. And at the moment there's maybe 1,000 of those or 6,000 of those in the crypto space. But at some point, that number is going to just keep growing. And at some point, we'll just stop counting because it won't make sense to, that's not the interesting thing. So I think that kind of, what is this business model? If you're investing in this tech stack, what are you investing in? You're not investing in a product. You're not investing in a company. You're not investing in an industry. You're investing in building an economy around a problem, and whether that stack will do that. But that's naturally global. This is sort of thing that New Zealand could get very good at building infrastructure for economies. But that mental shift, that what we're building here is pop-up economies, and the full stack of that. And again, this will just get better and better and better because as we add in AI, that enables human interfaces with it. As we add in agents, that means machines will populate it. As we add in more and more sort of satellite technology and high altitude platforms and so on, oracles will feed data into it. The tech stack will just keep on getting bigger, better, more complex. But the base layer of this was just the record keeping layer. And that's what blockchains are, is just the very sort of boring layer of just of just keeping track of facts and keeping track of updating of those facts in a way that everyone agrees is true. Right. That's it.
Jason, that was an amazing summary to end on because I love the way we started at record keeping and we've ended at record keeping, and the just the idea that at its heart it's nothing that complicated, but when we put all these concepts and terms that we aren't that familiar with in our day-to-day lives yet, it feels like it, but actually it's just solving a core problem, which is making sure that record keeping, as you said, is safe, secure, and in this case, faster and more global.
Yeah. And this is the oldest economic technology. Economies begin when you solve that problem. We just haven't had much innovation in that space.
Well, there you go.
For now.
Thank you so much for your time. It was a really, really eye-opening and enjoyable discussion with you. I hope you have a wonderful time or a wonderful week. And you're in Melbourne, aren't you?
Yes, no.
Yeah, you're in Melbourne. So it's an early start for you, but hopefully the coffee's kicked in and you have a good day. Thank you, mate.
Thank you, Stephen. Really enjoyed that.
Likewise. Catch you.
New Zealand Funds Management Limited is the issuer of the NZ Funds Active Income Series, NZ Funds Active Inflation Series and NZ Funds Active Growth Series, together the NZ Funds Active Series, as well as the NZ Funds KiwiSaver Scheme, the NZ Funds Managed Superannuation Service, NZ Funds Wealth Builder and NZ Funds Income Generator. For further information or to request a copy of the product disclosure statement for each of these, please contact NZ Funds or visit nzfunds.co.nz. This recording is provided for information purposes only. The information provided is not intended as a substitute for specific professional advice on investments, financial planning, or any other matter. Past performance is not an indication of future returns.